If you are buying real estate or you're an agent that's representing a buyer and you have a choice between a sales price reduction or a seller credit, always choose the seller credit. The only exception is if it's a cash buyer. On a cash purchase, it makes no difference. Go ahead and do the sales price reduction, but for everyone else, all the buyers that need to get a mortgage, that are getting a loan to purchase real estate, a seller credit is always preferable, and I'll give a couple monetary examples. Now, this also goes with agents that are buying for themselves that credit some of their commission, or if you're an agent that's crediting some of your commission to your buyer, these credits are always preferable to a sales price reduction. I'll explain why. So here's an example with agents. I'll see this in my office occasionally. And this will be an agent, let's say, that's shopping for a new principal residence, or some agents or investors on the side. So an agent will go on the MLS and they'll look for properties. And let's say they find a property that's listed for 1 million even. And the agent is going to represent themselves and wants to make an offer, then looks at the commission. Let's say it's a 2.5% commission. So the agent's factoring in their head, okay, well, I would make 2.5% or 25,000. What if I just call the listing agent and I say, look, I'm willing to pay the $1 million list price, but I happen to be an agent representing myself. How about I just take that 25,000 that you'd otherwise be paying me and apply it toward the sales price for a price reduction? Now, I see this usually after this has taken place. I'll be looking at an offer, or I'll be looking at a counter offer, and I'll see that this was negotiated, and I feel compelled to reach out to the agent and at least inform them of the advantages or disadvantages of doing it. And of course, I'm a huge proponent of the seller credit, or just collecting your commission and not doing a price reduction. Again, if you're not a cash buyer, don't do a price reduction. So the agent will usually push back and say, look, I just want there's two benefits. They'll say, I want, number one, a lower tax base for property taxes, and number two, a lower monthly mortgage payment, because of course, if the sales price is a little bit less, your mortgage payment is going to be a little bit less. And I understand why people do that, but you have to really sit down with the calculator and think about what you're doing. So imagine that same example of an agent. Let's say the agent's putting 20% down on $1 million purchase price, so they have a loan for $800,000. But that agent's going to get that reduction equal to the commission that they're conceding. So they're conceding $25,000 in commission. So now it's a $975,000 purchase price, okay? So if you calculate your mortgage payment, and this is considering a 30-year fix at 6.5%, again, you can just make up whatever numbers because it's all proportionate. It all pencils out the same way in the end. But if you look at a 6.5% rate, and you look at the monthly payment and the savings of having that $975 purchase price instead, you save just over $100 a month on the mortgage payment, the monthly mortgage payment. Now, of course, property taxes, and we'll just make up a number, we'll say 1.25%, and we'll multiply that by the $1 million sales price and the $975,000 sales price. Now, of course, there's going to be a slight savings, monthly savings there as well. So when you add it up, it's worth, I wrote it down here, it's worth, so just over $400, okay? But what are we giving up? We're giving up $25,000 cash in hand at closing. So you have to divide the $25,000 by the monthly savings to see how many months of that monthly savings do you have to wait before you actually enjoy the fact that you have a lower sales price and a lower property tax base and a lower mortgage amount. And the answer is, and now this is the low end, 4 3/4 years. So basically 4 years and 9 months before you actually enjoy any of the savings. You've spent the $25,000 you would have otherwise put in your pocket as commission, and instead you're waiting 4 years and 9 months before you get to enjoy any bit of a discount in your property taxes or your monthly mortgage. And you may have even refied by then, or may have moved by then. And now that's a case where it's a relatively short time frame before you start to actually enjoy. 4 years and 9 months is actually a short time frame. Let me give you a more realistic example of a typical buyer, not an agent buying for themselves, but just a normal buyer. And even agents, I'll see this, they'll just credit a portion of their commission toward the sales price. So let's say there's an $800,000 sales price, okay? So property taxes at 1.25%, we make up a number. It's $10K a year, all right? And then we do imagine we're getting a seller credit, okay? So let's say there's a request for repairs, or the seller offers a credit for $10,000. So now we're talking about, do we apply the $10,000 seller credit to the purchase price of $800,000, or do we get that $10,000 seller credit at closing? It's cash in pocket at the close of escrow. Now again, I see people do a sales price reduction, and I think it's insane, and here's why. If you lower the sales price, the $10,000, when you're negotiating in the middle of escrow, okay, and you get a reduction of your property tax bill on a monthly basis, and you get a reduction of your mortgage payment each month, and in this case, it happens to be a $67 savings per month if you apply that credit to the sales price, okay? Now, instead of pocketing the $10,000, you have to wait for almost 12 and a half years before you break even on the savings. I know verbal math is kind of tedious to follow, but let's think about this here for a second. You could have gotten $10,000 cash in your pocket as a buyer at the close of escrow. But instead you said, no, well, let me apply that toward a sales price reduction so that I get a lower property tax base rate, or property tax base, and that I get a lower mortgage amount. So my mortgage monthly payments will be lower. Now, $10,000 on an $800,000 sales price is only saving you $67 a month between property taxes and your mortgage. So again, I'm dividing out the reduction amount, $10,000, by the monthly savings, and it takes 12.44 years before you enjoy a penny of savings by having lower property taxes. Will you refi by then? Very high probability, yes. Will you have sold the home by then? If you live in California, very high probability you're not living in the same house for 12.44 years. So many times people never even get to enjoy the benefit of that sales price reduction. Now I've run all sorts of different scenarios over the years where I've seen it real low, like the 4 years I was saying, if someone applies their commission toward a sales price reduction, and I've seen it go all the way up to 100 years to recoup any savings. The bottom line is that's not realistic. To me, it's crazy, especially considering how often people refi or sell their home to wait years, if not decades, to enjoy a very small savings. Because just think, let's say you're crazy enough to wait 12.44 years to enjoy your sales price reduction. Guess what? You're only saving $67 a month. That's it. It's not a huge benefit. You've waited all that time for something that costs for an amount that's less than filling up the gas tank. Okay, now here's the final argument I hear that's against the seller credit or pocketing commission, and that is, well, I don't want to get taxed on it. Okay, that's a whole nother story because it's a non-taxable event. Why? It's a rebate. If the money is going to the principal on a purchase, it's a rebate. And the rebate gets added to the basis of the asset. So there's no taxable event. If a buyer's getting a seller credit or a commission credit from their own agent, or the agent is buying a home for themselves and the broker concedes the commission and lets the agent keep all or most of the commission as a principal, it is a rebate. It's non-taxable. There should be no 1099 issued. So there's no tax on getting that cash in your pocket, and you're not waiting years and years and years to recoup the benefit. So if you have questions, leave a comment. I'm happy to discuss the math because I've gone through this on a first-person basis with many agents and buyers over the years, and I'm very confident that it's always better to take a seller credit or credit from your agent rather than a price reduction unless you're a cash buyer. I hope this helps. Thanks for watching.